Hey guys, Prop Choice here with another insightful prop trading video. And today we're going to be diving into the thrilling world of day trading, a fast-paced, exciting and sometimes controversial trading style, where quick decisions can potentially lead to quick profits. I'll be laying out everything you need to know, and I'll also touch on how it differs from swing trading. And make sure to stick around to the end of the video as I explain why Smart Prop Trader, The Funded Trader, FTMO and Funded Trading Plus are some of the best prop firms for day traders to consider. Let's get to it. Day trading involves buying and selling within the same trading day, exploiting short-term market inefficiencies and price fluctuations. Unlike traditional investing, which has a long-term outlook, day trading focuses on immediate price movements, guided by technical analysis and market news. It's common in all trading environments, but demands a solid strategy and a disciplined approach. Why is day trading popular? Quick profits. Simple as that. But remember, with high reward comes high risk. Day trading can lead to significant financial losses, especially when leverage is used. Even the US Securities and Exchange Commission warns about these risks, including the heavy reliance on borrowed money and the stress of constant market monitoring. Also, as it relies on precise timing and quick trading decisions, day traders are particularly vulnerable to potential technical issues. With proper risk management, however, like using stop-loss orders, many risks can be mitigated. Some of the advantages of day trading include profitability. Day trading can yield considerable gains from small price movements, especially in volatile markets. Day trading also has the benefit of a variety of effective strategies for traders to employ. Some of the most common include news-based trading, which involves acting on potential volatility due to market-moving news events. Then we have breakout, where traders enter a position when an asset breaks above resistance or below support, expecting increased volatility and a trend in the breakout direction. Scalping is another common day trading strategy. It's particularly popular in Forex and aims for multiple small profits on minor price changes throughout the day, relying on a high number of trades. Pivot point strategy is where a day trader identifies critical support or resistance levels to determine entry or exit points. Reverse trading is a counterintuitive strategy, which involves trading against the trend. Range trading is a strategy that involves buying and selling a security within a specific price range. Traders identify the range where the top provides a resistance level and the bottom provides the support level. The goal is to buy near the support level and sell near resistance. And finally, we have high-frequency trading, or HFT, an automated form of trading employing algorithms to exploit short-term market inefficiencies. While high-frequency trading has its benefits, there are significant downsides. It's known to create market instability, and has even been linked to crashes. Many prop firms flat out ban high-frequency trading. In my next video, I'm going to be explaining why that's the case, as I cover everything you need to know about this controversial trading strategy. Make sure to subscribe so you don't miss out. Day trading is often debated. Some see it as a path to quick riches, while others view it as a high-risk game. Only a fraction of day traders are consistently profitable. In fact, research shows that only about 10 to 15% of day traders are successful in the long term. To be a successful day trader, there are several key requirements. In-depth market knowledge, sufficient capital, and an understanding of the fundamentals are crucial. And then there's the emotional factors. It's a high-risk game, and discipline and resilience are just as important, and often the difference between success and failure. Now let's touch on swing trading and how it compares to day trading. The two are often confused, and it's important to understand how they differ. Unlike day trading, which involves multiple trades within a single day, swing trading takes a longer view, holding positions for days or even weeks. While day trading is about quick, short-term profits, swing trading aims to benefit from larger market movements over a longer period. Is day trading right for you? Probably not. We only have to look at the small success rate to see that. Day trading is a risky endeavour. But depending on your risk tolerance, capital, and trading goals, assuming you have the discipline and knowledge required, the fact is it can be an opportunity to build wealth. If you feel like you have what it takes to be part of the 10 to 15% of profitable day traders, make sure to do your research. Choosing the right prop firm is crucial. Firms like Smart Prop Trader, The Funded Trader, FTMO and Funded Trading Plus stand out for their fast, reliable platforms and flexible trading rules, all vital for the quick-paced environment of day trading. These firms offer a range of tools and support to help you capitalize upon market movements effectively. I'll leave a link to each one in the description for you to check out on your own time. If you found this video helpful, please make sure to like and subscribe for more prop firm reviews and insights. And in my next video, remember, I'm going to be exploring the controversial topic of high-frequency trading and why the strategy is banned by many prop firms. Until then, share your thoughts in the comments below. What are your thoughts on day trading? Thanks for watching, and I hope to see you in the next one.